Yes, well, there's a lot of detail to be had. For example, the 28 billion in lending that we were speaking about there in that package, most of that won't be going to mortgages and homeowners. Most of that will be going to companies. And of course, the CBI and business groups will be welcoming that news because their members have been starved of credit over the last 6 to 18 months. But for homeowners who find it very tough to remortgage their home or even get a loan in the first place, it's not quite as good news because that money of 6 billion over 2 years is a mere fraction of the money announced from Northern Rock about 2 weeks ago.
But I suppose it does give an indication of how the government is trying to move money around. It's
absolutely imposing its writ on the banks that it now controls. It now controls, as we've discussed, Northern Rock, Bradford and Bingley and Royal Bank of Scotland. Lloyds joins that illustrious group now. So the government is imposing its will. It's saying we will impose political decision-making on a bank rather than just commercial or financial decision-making.
So why didn't it just nationalise it all as a whole right now?
Well, they say that they don't want to be in the banking business and that they want to keep private ownership involved. We saw Vince Cable in that piece there. Vince Cable has said very recently that it's inevitable that Lloyds Banking Group will be fully nationalised or taken under control. Whether that will turn out to be the case remains to be seen. Vince Cable has been quite prescient over the last 18 months of this financial crisis. But this is the last throw of the dice before full nationalisation of Lloyds and RBS. Economic terms, the government will control approaching 80%. In real voting terms, 65%, which means they can impose their will on the board, and they are already starting to do so.
Now, Lloyds have had to pay a pretty high premium for this, though, haven't they?
3 times the premium that Royal Bank of Scotland paid for insurance. Basically, they picked out £260 billion worth of assets that they think could go bad. To insure themselves against those going bad, they are paying a premium of 6%, £15.6 billion. Now, that is a lot of money, and they don't even have the money to pay that because the bank, according to the stock exchange, is only worth shy of £7 billion, half that amount of money. So hence you can see why their control has been diluted, and the government has a much larger stake and is imposing its will on Lloyds Banking Group.
OK, Joe, thanks very much indeed. Thank you.